Once again, good evening, everyone. I hope that you had a lovely weekend and you spent today not, chasing price action, as today was not, you know, a good day to do so, which, you know, I did send a message about before the fact. So, for everyone asking about when we will be transitioning to WAP, so actually we'll begin doing so by next week. So, there will be, is next week or next month? Is next week next month? I don't know. So it will be next month, right? We will have a section there and we'll be testing it and a forum like structure, whereas I will be messaging and right, we will still have this Telegram chat, right? And this group, right, we'll have them both for now until, we can all agree that it's better or it's easier to use and so on, right? So just the heads up for that, we'll be posting charts, there we will be having discussions, there we will be having groups, there we'll be having chats there, right? We will be starting with, a single forum and maybe just a community for all of you to be able to message there. But we will still have, our meetings here as usual until, we decide that it's better, as I just said. So looking at the economic calendar, which, you should be seeing on your screen right now, we can all agree that the most volatility will happen when? On Thursday, right? And the reason why we skipped over Tuesday is not because it's unnecessary, but because it is not as probable as you would like it to be. It will not be as probable. Why is that? And this is something that you must take note of. After bank holidays, right, due to the fact that we usually have, every trader jumping in, they are, excited, they are filled with emotions, everything, happening in their heads, which shouldn't be happening in yours, right? They are looking forward to tomorrow, right? And this will not be the best trading day, right? The better trading day will likely come, after Tuesday, even though we have no news events on Wednesday. This does not mean that you cannot trade on Tuesday. It just means that you must lower your risk if you are, right? And that shouldn't even matter in the first place, right? If you see a setup, you can take it. Just make sure that you're managing your risk. Because if you lose and you're managing your risk, you still won, right? We already know, right? Just by looking at this, and we have a high probability of the low high of the week, right? So pinpoint entries forming, on Thursday. And, this is something that we've done before the fact with the last week. We already knew which day would have the most movement, and the days with the most volatility or the most injection of liquidity usually, forms the higher low of the week, right? If we have price action supporting time. On Friday, you can see that we might have Friday pulling back into the range of whatever happens during the week, right? And why and how did we come to that conclusion? Due to the fact that we have a high impact news event on Friday. So it's very simple to understand, right? We frame the week by anticipating when price will move the most, right? And bank holidays such as today, low probability price action. Tomorrow we will have higher probability than today, but it will still be low in our eyes. Why do we have such low probability days during this week? It's week 4. We already know what happens in week 4, right? The algorithm is tuning down getting ready to transition into the new month, right? So all of the big players are taking their money off the table right now. They are, they already made what they're supposed to be making. They usually make the most money during the second and third week, which is why we usually have, right, the algorithm moving so much during, week 2 and week 3, week 2 especially, due to the fact that we have CPI, right? So week 2 and week 3, we get the most movements. And sometimes in week 1, we get movement as well, right? So it's easy for us to know what to expect, right? And that's amazing in itself. Just by looking at the economic calendar, we know that, okay, we won't have a lot of movement here, but we're going to have movement on this day. So I need to prioritize this day. Now we will be taking a look at the index futures chart, right? So you can see that here, right? We took this low out, right? Right here, we took this low out. Here, we did not. So this, will be something that will be introduced, not now. Well, yes, it's going to be introduced now, but it's not something that we will be focusing on currently, right? But I already talked about it, which is, a bad habit that I have, right? So we took this low, and this low was when? Was formed when? Friday. And this low was formed when? The following Thursday, right? So here, this is not, the at the normal sequential SMT or sequential SMT. It's not. But due to the fact that, right, here we have Friday. Friday comes after Thursday. I'm not sure if you will understand this, right? Friday comes after Thursday. This is Thursday, but it's prolonged. It's, it happened over a longer period of time, right? The normal sequential SMT would happen here during Thursday and Friday, but it still happened during Thursday and Friday. It's just that this Friday is from when? The previous higher time frame cycle. So, we'll be talking about that as well, but that is something that will be, discussed more down the line. So we did that here, and then here, what happened? The same thing occurred, right? So here we had this type of SMT happening again, right? And then we had price rallying back within the range when? On Friday, right? So that's what happened here. Price rallied on Friday, which is usually what we expect, right? Price, as long as there is a high impact news event on Friday, we expect price to return back into the range, right? So here we had the high of the week being when? Thursday. Here, Thursday, right? Here, Thursday, which is what we actually anticipated. So we are still in low probability conditions, right? It's not like, some a setup whereas I can, there won't be a setup right now whereas I can go live, which, I will be going live this Thursday in the morning session, right? So know that. But right now, I can't just, be like, okay, we're going to expect price to go here. Why? Why is that? Due to the fact that we have the Dow where in discount, we have the S&P 500 in premium, and we have the NASDAQ in premium. Here we had a cracking correlation, and here we still have a cracking correlation, right? So price is out of sync right now. We have liquidity above this high, right? above this high right here. And if we have either of these highs being taken, right? If we have either of these highs being taken, right? It's already, obvious to us that, we would have, or we would likely have sequential SMT due to the fact that this exact high is for the Dow is right here, right? And the high of this higher time frame quarter will be here. So, right, it's very, low probability that before we get some down movement of the S&P 500 and the NASDAQ, right, the Dow will be taking this high out, right? And you already know, right, this cannot be hindsight, right? Because usually people, they, get, shocked whenever we anticipate something and it happens, right? You shouldn't be getting shocked. Why? Because we always do this, right? And here, right, this movement of price right here, we will look at as well, right? So here, this is, something that you can study. So on this candle right here, and when we talk about this candle right here, it's not just this candle that we're referencing, right? It's all of these candles, right? At, this exact time, right? So here we have this candle, and, due to the fact that we have the Dow doing what it does during low probability conditions, and it's week 4, this is what we should expect, right? It's not week 2 or week 3, which is low probability. If you realize those are the times when you usually milk the market, those are the times when, price is so obvious that, it's almost as if you can't go wrong. So in this candle here, where did the closure happen, right? And we're not paying attention to the wick right here. Just the closure happened within, the proximity of this fair value gap, or, I would call this a liquidity void. And, if you watch the last lessons, you know why this is a liquidity void, right? So this closure happened within the liquidity void. This closure right here, looking at the NASDAQ right now, right? This closure right here happened where above this liquidity void right here. Whenever we have such price action, right? This entire candle becomes reactive, right? So here you see price pulling back here, on this candle within this range, right? And then it expanded a bit. The same thing happened here, price pulled back here, right? Within the range and then expanded. So this isn't a big move, but this is just the reason why this happened. And of course, the, most important reason is due to the fact that we had this SMT right here. And we already explained why this SMT is, relevant. 1 second. Right? And whenever we have the Dow out of sync, right, like this, always just focus on the S&P 500 and the NASDAQ, right? So focus on these pairs right here, because the Dow will more than likely not be of any help, right? So for now, you already know we have liquidity here, drawn liquidity is where? Here, right? NASDAQ here, let me click it, here. That's the drawn liquidity. right? We would consider this high being rated, right, for buy side or sell side liquidity if it was, caused by a news event, a, injection of liquidity, which is the, can be seen here, right, on Forex Factory. So until we have high impact news events, what do? We don't do much. And why is that? This is not clean price action, right? It's not. Here, price is literally consolidating right now. Here is the same thing. And then we have the Dow out of sync with these. Remember, right? We are not always, saying that price is low probability. Last week, what do we expect? We expect that these clean highs to be taken out after this low was taken out. What happened? We had price drop, and now we're looking at the S&P 500. We had price drop, take this low out right here, rally, right? We had price rally, and then we had a liquidity hunt right here. Then we had price drop and went for these lows, which is something that we expected, before the fact. Looking at the interest rate chart, right, you can see that this is, to me, pointing towards some higher movement of price, right? At least slightly higher for the NASDAQ S&P 500. Due to the fact that we have this tracking correlation right here, right? We never, right, and this is very important, you already know, we never overlook SMT. It's always important, right? So we have this right here, which is rare for the interest rate trades, right? Taking these off. It's better for you to, well, for me at least, it's better for you to, study price without, drawing on them, because it helps you, right? Think about someone that is completely new to price, right? Looking at this right here, they would, not see anything. But that not only is this, or would this be considered SMT, this would be considered sequential SMT, right? Due to the fact that we took this low out, right? This one did not take this low out, and this one, which is the T-bond futures, did not take this low out either, right? And remember that this is the reason why price turns around. This is the reason why you have, retracements in the opposite direction. This is all that causes that, right? This is the importance, and it has to do with the specific lows that, ran through. It's not just any low. It has to be specific low, the previous quarter's low. The current quarter, like wherever, whatever you're looking at, reflects upon the previous one. And, you already know that that's one of the only ways, to be honest, like that will give you, longevity in your trading or analysis. So we'll be coming back to this, and we will be here Thursday before the news event to see what, has occurred, so far in the week. More than likely, Wednesday will be giving you an update. And if there's anything, tomorrow that's significant of price, we'll be talking about that as well. Yes. Someone said that I'm just, taking note of this because I don't think that person understands what's going on. Someone said that in one of your videos, you said the 4-hour time frame, the candle has to close below or above to be considered a sequential SMT. Okay, to make it easier for you, let's remove the wicks. What do you see? Do you see it? Yes, you do. And now we'll look at the Forex market, the Forex triad. Here you can see that this is, low probability. Low probability. Yes, thank you. You're welcome. Low probability price action, right? Which usually leads to, extreme reversals, right? So this is the best thing, right? Whenever we have mirrored, not mirrored, I just read the chat while talking. So whenever we have, choppy price action like this is like what I love, because I know that choppy price action is followed by clear price action, right? So here, right, for the US dollar, and do we look at the 4-hour time frame? We have a lot of, sloppiness, right? So here we have the British pound and, being totally out of sync with the euro. And, it's been like that for a while, right? So here, right, lots of choppy price action, but, right, the liquidity that we have right here to, watch for the US dollars here. So this low right here, very important, right? This high, right? We have a pool of liquidity here as well. Currently, right, this is just price setting a stage for a reversal. So when will we know when prices are about to turn? Whenever we have sequential SMT. So for example, if we have the euro taking this low, this high out right here, or this low right here, while being out of sync with the US dollar, then we will, more than likely have a reversal. But the liquidity run must be caused by a news event. And that's the important part, right? It must be caused by a news event. It must be engineered liquidity that causes price to turn around. Don't worry about, price being choppy or, anything like that. This is what usually happens during these times of the year, right? And these times of the month. Q4, just as how, during the last month of the year, we have shitty price action. That's always going to happen, right? That's always going to happen. It will happen this year, next year, the year after that, and the year after that as well. So for now, right, there's not much more for us to talk about. All we need to wait for right now is to see, right, price being in premium, there being bearish sequential SMT, right, followed by either a precision swing point or an SMT fill, or the opposite for, a bullish move. And we'll be here, right, during the course of the week, and we'll be touching upon, whatever high probability moves show themselves. So pretty much, done with talking about shorts, but I will be answering some questions right now that I see right here. What about the monthly cycle intermarket sequence SMT between bonds and indices last week? I am not sure what you were talking about. If that happened, then I'm pretty sure that it played out already. Or if it happened and I didn't, pay attention to it, it's just not important. Days high time frame sequence SMT with immediate lower time frame cycle. Sequence SMT a model by itself. Yes, it is. But price must be in the appropriate, range. So for example, it should be in premium if you're bearish and discount if you're bullish, right? Every precision swing point, right, is specific to a certain time frame, and we will touch upon that. So, right, we will get, which cycle, which sequential SMT goes with which time frames, precision swing point, and so on, right? We already gave you one already, which you guys should already know, right? Weekly sequential SMT 15-minute time frame precision swing point, which was literally the high of the week right here, right? That's a two-stage setup in itself, right? As long as we have pricing, premium, that will allow price to, reverse. And even right here, right, on this candle right here, right? This candle right here that I'm pointing on with my mouse, right? The low of this candle, right before price ran above these highs, what caused that? The same thing. Weekly cycle sequential SMT and 15-minute precision swing point. So we'll be here, right? During the course of the week, do not, overtrade, try to be level-headed, right? It's hard if you're new, of course it is, I know. But don't overtrade. The best trades that, happen, the best setups just happen like 2 to 3 times a week, right? The best setups that are just, on point. If you're always scalping, you'll find setups, right? But you'll, take more losses. Let's just say it that way. And if you have a large capital, which some of you do have, you don't need to be, scalping, right? If you have like one of you have like, I'll just say over 7 figures, you don't need to be scalping, right? Weekly, 2 or 3 trades, high probability, make sure that, you have this right here. Aim for 3 hours at least. You can take 70% after you, hit your take profit, then you let the rest run if you want, or you stop at break even, right? That's what you should be doing. You don't need to be trading on anything even lower than a 5 or 15-minute time frame if you have large capital. If you're someone now that is trying to run up a funded challenge or whatever it is, then yeah, you can be scalping. Why? Because that's not your actual capital, right? It's basically demo money, but you'll still be paid for it, right? So you can use that to generate large capital, which you will not be gambling with. I hope that you found this insightful. We'll be back, of course, as usual. And hopefully when we're back, next time I am 100%, not having a sore throat or, coughing or anything like that. So until then, have a wonderful week.